Welcome to lesson 26 of business accounting, and in this lesson I will introduce you to manufacturing accounts and also the terminology that we will use in manufacturing accounts. I will also introduce you or just explain the different types of companies that we have and then also explain the cost flow in manufacturing accounts. Now, when we look at different entities, and although I'm talking there about companies, it doesn't need to be a company. It can be a sole proprietor or even a partnership. So let's rather talk about different entities or then different businesses. And we have a picture here just to draw all the businesses that we will refer to. So first of all, we have the supplier. Now the supplier will supply to the manufacturer. And because he supplied to someone, we can say he's a distributor or a wholesaler. Then we also have the manufacturer, and this is what we did the past semester. We looked at manufacturers. All right, and then we have the distributor or the wholesaler. Normally, this wholesaler will buy from the manufacturer and they will sell to the retailer, and the retailer will then at the end sell to the customer. Now, when we look at manufacturing businesses or entities, there are normally 3 stages of completion when we want to attach a value to the inventory. And the first one will be our raw materials. The raw materials will be issued to the production process where it will be converted into finished goods. So in other words, when we look at inventory, we will have inventory of raw materials, we will have work in process or production inventory, and we will also have inventory of finished goods. Now all of these will have an opening and a closing. This is very important to remember. When we look at cost classification, we will say that manufacturing cost includes all the costs incurred by the business in order to transfer raw materials into finished products. And so finished goods will then include direct materials, direct labor, and manufacturing overheads. When we look at this diagram, this is the manufacturing and non-manufacturing cost. Now, first of all, we look at manufacturing cost, and we also call that product cost. You will remember when we introduced you to cost accounting. Now, manufacturing cost consists of direct material, direct labor, and then your manufacturing overheads. And we said that direct labor can be linked to a certain product, the same with direct labor, while manufacturing overheads cannot be linked to a certain product, therefore they are called manufacturing overheads. But at the end, we must still link or allocate these overheads to the products. Then if we add direct material and direct labor, we call that prime or primary cost. If we take direct labor plus all my manufacturing overheads, we call that conversion cost, because this is the cost to convert raw materials then into finished goods. Then apart from manufacturing cost, we also have non-manufacturing cost, and we also call that period cost. We have marketing or selling cost, and then we also have admin cost. We already said that manufacturing cost flow is the flow of direct materials, labor, and overheads through the materials inventory, then to the work in process or WIP, and then to finished goods, and then at the end into the account called cost of sales or cost of goods sold. And you will remember when we did the statement of profit or loss, we used the cost of goods sold or then the cost of sales. This is only a diagram again to show you the cost flows. We have direct material, direct labor or manufacturing overheads. These will then go to work in progress or work in process, when we are done there, they will go to finished goods. When the goods are basically finished, they will go to the finished goods account. And from the finished goods, they will be transferred to the account called cost of sales. And from there, we will sell the goods. So this is now where the sales will take place. Now, the first one is the direct materials or the raw materials. Now, the raw materials show the balance of the cost of unused material. In other words, the cost of materials that have been purchased but not used. We will start with an opening stock or opening inventory on the debit side, and then we will add our purchases also on the debit side. And when we issue this raw materials to work in process or WIP, we will do that on the credit side. When we then at the end balance this account, the balancing figure will be my ending or my closing inventory. So very important, you start with beginning or opening, add purchases, less that you transfer to work in process, and then you will end or you will balance it with a closing inventory. Now, when we transfer the raw materials to inventory, we will call that raw materials now direct materials. Okay, so as direct materials and direct labor enter the production process, their costs are added to the work in process inventory account. The cost of overheads for the current period is also added. Okay, then the total cost of direct material, direct labor and overheads and transfer to the work in process inventory account during that period are called total manufacturing cost, or also in some textbooks they refer to current manufacturing cost. So total manufacturing cost is basically all the cost involved to produce some products. Now here you can see in the WIP account, I will start with my opening inventory, then add it from raw materials, and then also add your direct labor and your overheads. Then you will issue now to your finished goods, and the balancing figure will be my ending or my closing inventory. In my finished goods account, I will also start with my opening balance, and then I will add the ones or the products that I transferred from WIP to finished goods. Then I will issue to my cost of sales account, and the balancing figure again is my closing inventory. This is just an illustration of labor cost, my wages control account. You will remember my wages control account will include all my wages, the entire amount of wages that will be on the debit side. And now I will allocate these overheads or these wages to either overheads or to work in progress. Very important here to remember, it's the direct labor that you will then post to the WIP or production or work in process account, and the indirect labor will go to or is called then your overheads. At the end, your wages control account should be balanced out. In other words, your debit should equal the credit. Here we have an illustration of my overheads account, my manufacturing overheads. You will remember on the debit side, I have my actual amounts. This is the ones that I paid for, that I actually incurred. And then on the credit side, I have the applied or allocated overheads. If we have over application of overheads, it will go to the debit side. If we have under allocated overheads, we will enter it on the credit side. Now, this is only a brief introduction to the terminology that we will use and how products will go from raw materials to finished goods and where we will sell them. In the next lesson, we will then look in detail at the cycle from raw materials until finished goods, and we will also look at the manufacturing statements.